home prices going to drop? That's our topic for this morning's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. We're going to start with the markets this morning. The stock market opened up higher this morning based on the producer price index data that came out this morning. We'll discuss that in just a few minutes. But since then, stocks have started to kind of go back into the red after a pretty major slide yesterday that we saw. This morning, mortgage bonds have been very, very volatile all morning this morning. They started out at 20 basis points down. They got to 20 basis points better. They went back to flat. Now they're 34 basis points down. The 10-year yield is up 7 basis points this morning, and it's at 3.42. It's the highest level for the 10-year yield in probably 10 years. What that means for interest rates this morning as far as mortgage interest rates are going to open, if they haven't opened already, worse than where they left off yesterday. And we're going to be in reprice territory all day. We could see some repricing for the better. We could see some repricing for the worse. Yesterday we saw both. We saw repricing for the worse throughout the day, then for the better, and then it got worse again. So just a little bit of a volatile time right now. And all of this activity in the market is really in the shadow of first the CPI, the hot CPI data that came out on Friday, and now we're in the shadow of this decision from the Fed on what it's going to do with its Fed fund rate. That news is going to come out tomorrow. We'll save that news for tomorrow. But for now, we'll keep talking about what's kind of moving the market, at least this morning. That was the producer price index. So the producer price index is an index that measures inflation data at the wholesale level. This data is for the month of May. So in the month of May, we saw producer price index increase by 0.8%, which was right in line with estimates. The PPI declined slightly from 10.9 to 10.8% year over year. All right, now the core PPI, which strips out food and energy prices, that was up by 0.5%, slightly less than expectations of 0.6%, and that was declined from 8.6 to 8.3%. So everything was either in line or slightly better on the PPI, the data that came out this morning. And so that's why we saw kind of that initial stock market rebound, if you want to call that what it was. But again, stocks have kind of gone back into the red today. And then the mortgage bond, the bond market and the stock market, are all of the activity, like I said, is just kind of hanging out in the shadow of the looming Fed decision. So we'll wait and see how and what they decide and how that's going to affect the markets. Now, on to the housing market. And I want to address this question, and we've talked about it a lot. Are home prices going to drop? And I want to divest this question into two different questions because they're really two different things. Number one, are home prices going to drop? And number two, are home values going to drop? We'll answer those two questions after we go through some data kind of separately because they're really two different things. But let's talk about it. So doing some research, this is what I found. The number one, first things first, demographics are economics, right? And so age groups matter when it comes to the economy and what's going on in the economy. And the pandemic, the COVID-19 pandemic, kind of overshadowed an event that happened, and that's this. One of the biggest age groups of demographics got older during the pandemic, all right? So we're talking about the age group of 28 to 34. Now, the average age for the first-time home buyer in the United States is 34 years old. This demographic of 28 to 34 is one of the biggest age group demographics or patches that we've ever seen. Now you combine the fact that these people are, this is the biggest demographic that we've seen that's reaching the first time home buying age. Combine that with other statistics and scenarios, household formations, which is part of that, move up, move down, investors, things like that. You combine all these things that are happening, and what we have a very strong replacement demand. So replacement demand for houses is very, very strong. Now when you couple that with a supply issue, a very, very low inventory, and supply has been declining since 2014 annually. So the supply or the amount of inventory on the market for existing homes has been declining since 2014. You combine this strong demand, this huge demographic that's coming to home buying age, and the low inventory, you got a serious supply and demand problem. Now we started out the year with 870,000 homes, existing homes for sale. That's a record low for existing homes for sale, all right? And we've got this strong demand, and so what's occurred or what's happened is you've had what's called forced bidding. People are trying to, bottom line, people need shelter, right? These homes are being formed from this age group of people that are reaching that first-time home buying age, and they need shelter. And so you have multiple people bidding on the same house, and you see these prices going up. That affects, after those close, that affects the appreciation of everybody else that's around them. And so that's what we've seen happen over the last year. Now, here's what's going on. We know that affordability is an issue. Interest rates are higher. Home values are higher. Home prices specifically are higher, which is different than home values. And so we've started to see a little bit of a weakening in the demand, right? We don't have as much demand as we had, but we still have almost record low inventory levels right now. So our inventories are still low. The amount of homes for sale are still low. The amount of new homes that are being built right now just can't keep up with the demand for various reasons that we've discussed, including supply chain problems and labor shortages and things like that. So you've got all these factors that are playing into this, and here's what we think. Look, first of all, there's no crystal ball, but what we see happening is a deceleration in appreciation. All right, that's home value, into normal ranges that we typically see around 5% year over year, and that falls in line with the CoreLogic report that we talked about last week. You can watch that video and see kind of what CoreLogic had to say about home values, and we agree with that percentage. We think that appreciation is going to decline to, or decelerate, not decline, decelerate to about 5%. When we saw a jump from last year over year of 20%, we think it's going to slow down to about 5%. But we don't think that home values are going to decline. Now, the difference between home values and home prices, right now you have a lot of people, since inventory is low, demand is high, time on market is still around 16 to 18 days. So what's happening is people are getting ready to list their home and sell their home. They're listing it for a price, so the price of the home is very, very high. And so what we do expect to see in the coming months is those home prices, those homes that were listed for sale, we expect to see price drops on those homes, and we expect to see people that start to list their homes in more reasonable ranges, not trying to see, throwing whatever they can out there and seeing what they can get. So the difference between the two, home prices on new homes that are being listed for sale, we do expect to see that to start to come down and not be in unreasonable territory, and we expect to see some price drops on listings that are homes that are listed for sale. But for home values, we don't expect to see home values decline. Instead, we expect to see appreciation to decelerate. Again, no crystal ball, but that falls in line with a lot of what other analysts are taking out there are taking a look at and seeing. Now, that's all the news that we have for today. Remember, stay positive, focus on what you can control, and listen, be sure to like, comment, and subscribe to our channel. We bring these daily updates on mortgage and real estate news and the mortgage market from an informational standpoint to try to bring you information on what's going on in the market. So be sure you like this video, comment if you have any questions, subscribe, and that way you can get these daily updates. And make sure when you subscribe, you hit that bell so you get notified when we post these updates, all right? Listen, thank you so much for taking a look at this. Hope you have a great day. Stay positive, and we'll see you tomorrow.